Sam was telling us about his crazy travel lifestyle he's having these days.
Yep.
A lot has changed
just
in the last
countless conferences, man. They're fun and all, and it's cool when you get to like meet Bitcoiners in real life. But the travel just gets so exhausting.
What was your favorite conference of the years of 2023?
I mean, I have to say Pacific Bitcoin just because I'm biased, but it really was kind of a fun conference. And then, I went to this like insurance conference in Atlanta, outside of Atlanta, and that was fun. That was actually really fun because there's a bunch of claims professionals and lawyers, actuaries, and like Natalie spoke, and I was just kind of there. But it was hilarious because it kind of helped her put together a presentation and about Bitcoin and insurance. And then the people right before her was like a panel with like the head of global payments for JP Morgan Chase and like some of these other ones talking about like CBDCs and shit. And then Natalie goes up there and she's just like, the banks have been fined like billions of dollars. You can't trust them, like to this audience of auditors and insurance professionals. And I was so proud. And I was just like looking at like the Chase lady who just like shaking her head like, these Bitcoin, like who let these Bitcoiners in? And then afterwards, like at the kind of the hoity-toity cocktail party, there was just funny ruffling feathers there. But there were some people that we definitely orange-pilled for sure, like, which was cool. But it was a dime a dozen. But that was a fun conference.
Oh man, it really is something when you have like that mutual understanding with someone. You're like everybody else, like they don't understand. Like you're sitting in the corner of the room, like they don't know. You know that meme.
Yeah, no, yeah. They don't know too, and insurance companies are so overweight bonds. It's ridiculous. They're like, they're conservative investors, but they have like 78% allocations to bonds. And it's funny because the surveys are like, what's your number one concern from like Goldman Sachs of insurers? And it's like inflation. Mm-hmm. And then they're like, allocating to these other alternative assets. And obviously like life insurers have like very long time horizons. And so it's just like, it makes so much sense, like from so many levels. But I think there's like a lot of regulatory hurdles in that industry. They're highly, highly regulated industry. So I think there's a little bit of hesitancy. But Bitcoin makes a lot of sense for life insurers specifically.
Absolutely. I've always thought about a Bitcoin-only general fund insurance company where basically policyholders know that like their claims is somewhat based on Bitcoin, and they know that going in, and I think that'd be an interesting product. But Zach, what episode of Value Stack is this?
45, man.
Heck
45.
Yeah.
45.
Welcome to Value Stack, episode 45.
Yeah.
Sponsored by Zen.
Dude, I saw I was watching Theo Von's podcast, and he had this ad for Zippix, and it was like these nicotine toothpicks that you it's like they make every delivery vessel possible at this point, man. It's the future, boys. The future. This is the end of 2023, so we're supposed to recap as per tradition. This is the third podcast we've done together, us three. For the first time viewers here, Sam was our very first guest on the show back when Beau and I were doing it together, and back when Sam was not on CNBC. So it's been a good year for I think for both of you guys, and I know you both moved out of Denver, which is why we're not doing it in person this year, but that's okay. We will prevail. We're here on Riverside. Still got the virtual drinks here, and and we're gonna send it off to year end. And what we'll do is kind of go through, I think, what you guys think are some of the some of the most important things that happened this year. For just to kind of give some background, Sam is I want to say you're the lead analyst at Swan. Is that the correct correct title?
That's the correct lead market analyst.
And
Whatever you call
Beau
it.
is a high net worth financial planner. Beau, is there a title that you have these days? What are you rocking now, man?
Senior Bitcoin advisor.
Senior Bitcoin advisor.
I'll go with that. Yeah.
So, I mean, particularly you guys, like, I don't study as much of the financial like news and media as much, but I know Sam is deep in it, writing articles, and Beau's talking about it all the time and with clients. So maybe we start with so what happened this year with interest rates? I think that's a first place to start. Is like kept climbing, right? Like, where were we a year ago? Where are we today? You were talking about bonds as we sort of opened the show, Sam. So maybe you could take it off with like what's going on in the bond market, interest rate market. How is that affecting this cycle?
Yeah, well, bonds are set to have their third consecutive losing year for the first time in history, Treasury bonds, which makes sense because the Fed was on its fastest hiking cycle, or at least one of the fastest hiking cycles in its entire history. And that kind of led into the start to 2023, where they kept hiking rates, trying to bring inflation down. Inflation started to decline in terms of the CPI. And then you saw the banking crisis. I think the banking crisis, people almost like forget about all that chaos that happened in the spring when you had the second and third largest bank failures in history happen. When you had the deposits flee and you had their bond losses stack up like crazy because the Fed basically jacked up interest rates. It's crazy because the Fed, when they kept interest rates low, they gave forward guidance to these banks that said, hey, we're not going to raise rates on you. You know, you buy up all these bonds. And these banks did it with like terrible risk management on their end. And they just bought all these bonds at super low interest rates. And then when the Fed jacked up interest rates, once they got inflation completely wrong, they're like, oh shit, inflation's running. And so they tried to pump the brakes. And these banks that listened to them and actually binged on bonds, those positions just got crushed. And then once depositors fled very fast, there was like a bank run panic. Well, then suddenly they actually had to realize those losses on the bonds. And that's when they got into like a lot of trouble. And so you saw that, but then you also saw the Treasury, the FDIC, and the Fed come out with these emergency programs, which was a big signal to the market. I think you can argue if it's QE, if it's not QE. It doesn't really matter. To me, it just shows that there's like a knee-jerk reaction response from authorities to intervene in the markets whenever something bad happens. And I think the markets took that as a signal that game on. We know exactly what they're going to do if things start to turn south, whether that's asset prices, banking failures. And so you saw, risk assets really rip basically early summer. And then the Fed started to kind of like pause because they just caused like huge banking crisis. So they're like, oh man, we can't really raise rates anymore.
Which banks were that, Sam?
Yeah.
Which banks were that blew up?
That was like First Republic.
Silicon Valley Bank,
Silvergate, the other crypto one, can't think of right now. But First Republic and Silicon Valley Bank were the big ones.
Was it Genesis, or were they part
No,
of that?
it was like New York something. It was
it starts with an S. It was Silvergate and it was the other crypto one.
Silicon
Valley. Whatever.
Well,
doesn't matter.
And so, and the Fed created that, like, what was it, like, stability program, liquidity? Like, it was the thing that basically if your mark-to-market value of the bond was underwater, as long as you didn't sell it, the Fed would still give you 100% par value, right? Was that essentially how it worked, right?
They could borrow against that delta between the mark-to-market and held-to-maturity.
So even if your bonds were 60 cents, you could borrow as if they were $1 against it, as long as you didn't sell. But Sam, what you're saying is that's
the bank term funding program, yeah.
Bank term funding.
BTFP. Yeah, they just throw these acronyms out there.
Buy the dip.
Yeah, they didn't make it that for. It's basically what they did. But yeah, it was like pseudo yield curve control in a way for these like banks for 1 year. They could, doesn't matter how high yield would go, they would just like basically get to borrow against the bonds at par, no matter what price those bonds were actually at in the market. So it kind of like papered over the banking crisis. But then you also had the Treasury, like, I don't mean to like take over the conversation, but the Treasury, there was like the debt ceiling debacle. I don't know if you guys remember that in like early June, where everyone's like, "Oh, we're going to default on our loans," blah blah blah.
This is like every few years they say that.
Yeah, they'll like kick the can, but then like the Treasury has to issue like a ton of debt. Like the Treasury's been on these like $1 trillion issuance of new bonds as they try to fund these massive deficits. And meanwhile, the Fed's jacking interest rates on them, so the interest expense on that debt that they're trying to issue is just ballooning. And you have this like weird dynamic where the Treasury is trying to do like really stimulative like spending programs, and the Fed's saying like, I'm trying to crush inflation, but the Treasury is like kind of causing inflation, and so they're knocking heads now. But that's been I think the Treasury and the massive deficit spending has been a buoy for risk assets. And I think a lot of people got caught off sides with like the stock market ripping, like NASDAQ's almost near all-time highs. Bitcoin's up like 140% on the year. A lot of people, I don't think last time we talked, I mean, it's been a pretty phenomenal year in terms of price action for Bitcoin and other risk assets. But
yeah, we were at what, like 18, 19K at the beginning of 2023, right? The year's not over either, so we've still got a month.
Yeah, it's been a good year. I don't know if Beau has anything to add, but that's how the major events that happened this year in my mind.
Yeah. This year was interesting with my clients. It was like first couple months was the banking crisis, and I spent a lot of time explaining to my clients that these banks took their assets and basically guaranteed a return for themselves of about 2% for 10 years. And then depositors started demanding 5% on their deposits. And, there were banks that blew up because they were doing way riskier things with their assets than guaranteeing 2% for 10 years. But even the banks, just small regional community banks that were losing depositors. And I guess the weird ironic thing about it all is like deposits left and went to JP Morgan, and they give their depositors like 0.05%. So, the average depositor, they've got private clients and they do like certain things, but I think it was just showed that people were just scared shitless of the banking system for a minute. And so JP Morgan was the big beneficiary. They got a bunch of cheap deposits, and then it was like just about the time I was explaining to people like, FDIC insurance, SIPC insurance on their investment accounts. Then like in the midst of that, OpenAI comes out with ChatGPT, and Microsoft invests like an ungodly amount into the company, and that kicked off this AI craze. And then the stock market went crazy, the NASDAQ went crazy, and then it was like spent the whole rest of the year explaining to clients why we were underperforming because we weren't all invested in NVIDIA. So it just shows how quickly sentiment can change. It's like, is my money safe? And like, oh, why don't I just own a bunch of semiconductor stocks? Like people's sentiment can just snap like that.
Mm-hmm.
It really does change so fast, man. Like the narratives, like as you guys mentioned it, I've completely forgot about the like banking crisis of the first quarter.
You remember Credit Suisse too?
Yeah.
Global systemic important bank going under. Essentially, there's like a shotgun acquisition. That was wild. That was like right in the middle of all that, and it's interesting. JP Morgan Chase, because you're totally right. It's like the big banks got bigger and the smaller banks got hurt. But also when First Republic failed, JP Morgan was basically given all the assets on in First Republic on a silver platter, like pennies on the dollar. got that entire business for nothing. That's exactly what happens in all these crises. Is JP Morgan just seems to get bigger.
There's a moral hazard that's involved in all of this, it seems, where it's like the too big to fail are exactly that, and they get bigger and bigger and bigger and bigger. And now, BlackRock is accumulating Bitcoin for the ETF. I mean, it's like, is this not a symptom of the systemic problem, right? Like the moral hazard that exists within our banking system allows for them to take risk that they otherwise maybe wouldn't, but because they can get bailed out and they get these things for pennies on the dollar, they're like, well, shoot, like there's really no risk, right? There's no downside. They can do things like they just flood. Like it's not really like the biggest banks were flooding deposits, right? Like because everything else was basically told they weren't safe because they're not too big to fail. So it's like you're either in the cool group or you're not.
Yeah.
I mean, I would make the argument that JP Morgan set itself apart as like quasi central bank arm. Like, I really feel like this, and quietly throughout the rest of the year, smaller regional banks have failed. There's been a couple more, and I don't know, just like the way Jamie Dimon and JP Morgan got, like you said, Sam, preferential treatment throughout this. I think, money left Bank of America and went to JP Morgan. Like,
right.
I think there's one safe bank, and I think sophisticated people's minds, and it's kind of a sad state.
You guys hold money in banks still, or are you all completely in down the Bitcoin? What do they call it, on zero? Like, do you guys still use fiat as a savings?
Negative for a while.
Nice.
I still use the banking system.
Yeah.
I'm just like not at a point where I can live only on Bitcoin. I mean,
I wouldn't want
pay
to.
bills and stuff. Business, It is what it is. It's kind of like a necessary evil, but I don't know.
Well, I mean, there's no reason to. Some people say you should be on zero, but I don't think there's a reason to like take risks with your monthly cash flow. Like,
I'm allocated enough, honestly.
Yeah, like that's what I'm saying. Like, you need certain obligations immediately. We've seen Bitcoin do all kinds of crazy things up and down. So in my mind, it's like there's a place for fiat, even if it's only for the short term right now. Maybe in the future. Yeah. But like, try moving Bitcoin.
Spend fiat than Bitcoin. And
right. Like, as long as people are going to...
Capital gains is real. Like, there's tax consequences.
And as long as people accept fiat, I'm going to just pay them with that instead of Bitcoin, So in order to pay people fiat, you got to have it. And plus, like, there's not been enough innovation in the payment side, I don't think, today.
It's getting better.
What do you mean by that, Zach?
So, I mean, as I look right now, it seems to be like if we look at the mempool, it's like, here, let me see if I can screen share. It's like we're talking 70 sats per byte, right? And this is not like some kind of crazy fee spike time. I mean, the whole year has been like this. The whole year has had. This is the highest the fees have ever been, but it's consistently. But the mempool's packed, so like we can't even use it every day yet. Like, there's no point, right? Like, Lightning has not been adopted to the point where it can be used in day to day yet. And we just saw a wallet of Satoshi get shut down. I don't know if you guys saw that in the U.S. Yeah. That was like the one that everybody used, the custodial one. So they're coming after, man. They are you guys still feeling? So I guess, like, compared to a year ago, like, are you more bullish on Bitcoin, or less, and why?
I'm more bullish on Bitcoin. I mean, I was always pretty bullish in general, but like long term. But right now, I just feel like there's dynamics happening. Like I do think the spot Bitcoin ETF is significant. I think it'll bring a lot of demand onto the underlying Bitcoin, and so I think a spot Bitcoin ETF is driving the price. I think a shift in sentiment amongst institutions is driving the price. I think the upcoming halving is going to be bullish. I think that there's just more of a focus on the unsustainable nature of the U.S.'s fiscal position and the reckless monetary and fiscal policies, and investors are becoming more aware of what Bitcoin is and how it's a hedge. And so there's like these supply dynamics of like 70% of Bitcoin hasn't moved in over a year, so investors are holding.
Is it
Plus
that
the
high?
Yeah. Plus the issuance rate is going to get cut in half. And so there's just like not that much available Bitcoin on the market. And then you have like these ETFs coming in and this kind of shift in sentiment from institutional players and high net worth individuals and financial advisors. There's more education, is people just getting more aware. There's just not that much Bitcoin, like straight up. So
There's not enough
I'm
Bitcoin
pretty
to
bullish.
go around. Michael
just pretty
Saylor's
bullish.
just taking more and
Yeah, it's
more
like-
off each day.
That's a great point. Like Michael Saylor just bought another like 17,000. And
Crazy.
so now they're sitting on like, I think like
140.
Yeah, 140 or something like
Maybe-
that. But that's like one company. That's like one company. There's like 1.7 million Bitcoin on exchanges right now, roughly. And one company, one small company in the S&P 500 has acquired 140,000. One of these like ETFs alone, and there's multiple of them that are likely to approve, they're gonna have to buy like hundreds of thousands of Bitcoin to like seed that fund. And it's just like, there's just not enough Bitcoin. So yeah, I'm pretty bullish, honestly. But I think like a recession could make the price go down. I think like a spot Bitcoin denial could make the price go down because I think the market's expecting it.
Right.
Regulatory scrutiny is always like something to consider as well as a risk. But in general, I'm pretty bullish.
174,530 they have as of his
that's
tweet
one
2
company.
days ago.
It's one
Great.
company.
So Sam's more bullish, Bo. What about you?
Same, way more bullish. I think a Bitcoin ETF really changes the game. I think, I mean, that's huge. It's really huge. Like I work at a company where I've been trying to convince the investment committee that Bitcoin is worth considering, and they're like, okay, but how would we do it? And it's like, oh, we could buy the Grayscale Bitcoin Trust that is, falling from a 30% discount to a 40% discount, and that scares the shit out of them. In hindsight, it was probably a great idea, right?
Great.
Because now the discount's what, 7%?
That's a
Right.
trade. That's a trade.
That was a
Yeah.
great trade, dude.
And I think if you look at the Grayscale Bitcoin Trust and the Osprey Bitcoin Trust, Osprey's a lot smaller, obviously, but they both fallen from like, close to 50% to almost par. So I wonder, and I don't know enough about this, maybe you guys do, but do you think that like the likes of BlackRock are like buying units of this trust? Because if they become redeemable, then there's your Bitcoin, there's the seeding for the ETF potentially. Right, you could redeem the Grayscale Bitcoin Trust at par, potentially. I don't know. I'm asking.
That would be savage, huh? If you just like they like got their Bitcoin and then redeemed them and then used that as inventory to issue their own ETF for spot Bitcoin. I mean,
Who's that?
They got it at 40% discount.
BlackRock
Oh, I see. Oh, I gotcha.
or Franklin Templeton, didn't they also issue a Bitcoin ETF filing?
Yeah, they did. They're not friends of Bitcoin, really. I like
Bitcoin's not friends with them.
the CEO was on stage at some conference recently that was like, Bitcoin's the greatest distraction in what is like the greatest innovation in financial technology, blockchain. And I was like, oh no.
He's a blockchain, not Bitcoin guy.
It's a lady, but yeah. they're pretty bullish on blockchain, but they don't understand Bitcoin. So I was kind of surprised to see them file an application after that interview. But
well, Grayscale has the ETH ETF, right, and other stuff, and BlackRock. I saw that they had a filing for an ETH ETF too. So like, is it not true that like none of them really get it, and they're just vicious capitalists? And they're not really here for the revolution. Like, let's just be honest. Yeah. They're here to charge management fees.
Yep. Yeah. Which is good. I mean, like, they're incentivized to market the shit out of it once it gets approved. Which I don't care if you have like proof of work and proof of stake. I'd be concerned about a large entity acquiring a lot of ETH because that actually gives them more power in that consensus mechanism. Whereas
Coinbase already does, Sam. They already have like a huge chunk, and then they built their own ETH-based type, Ethereum-based chain, right? Base, like they came out with that this year. I feel like ETH is controlled by Coinbase, or at least to a large degree.
Real quickly, rest in peace, Charlie Munger. Rat poison squared.
Oh, no. That was he said, Charlie Munger said Bitcoin was a turd.
I thought he said
rat poison squared.
Oh,
I thought Warren
said both.
I thought Warren Buffett was the rat poison squared.
Like Bitcoin is killing baby brains or something. Like he said something wild like that.
99 he lived till. I mean, imagine what was happening when he was born. I mean, can we blame the guy for being against Bitcoin? Rest in peace.
Rest in peace, Charlie.
I think if any of us make it to 99, that's a good life. Bitcoin succeeds or not, Value Stack hits 1,000 subscribers or not. I think they're basically up there with the same importance in my mind. But rest in peace, man. Life's not guaranteed. Well, it's guaranteed that it's going to end. So, rest in peace, Charlie Munger. Dude, whenever a famous celebrity person like that dies, do you ever feel like, why do they get like all the credit? Like why when a celebrity dies, people who've never met them are like rest in peace, but like people don't even bat an eye for like second acquaintances that they know. Like I mean, why do you think like there's, I guess maybe because he made an impact on the investing world and he's contributed to people's education in some way, but I just always wonder, like, why? Like, I don't even know him.
Yeah. I saw right after he died, someone on FinTwit was like, look out, FinTwit's about to be insufferable for the next 2 weeks, and they couldn't have been more right.
It's been insufferable for years. What do you guys want to talk about? I got a list here of topics. We could talk about CZ and SBF going to jail.
Yeah.
All the bad guys getting locked up.
Well, that's like
Trump,
one of the reasons I'm bullish.
Lock her up.
That's one of the reasons I'm bullish, man. There's been like a massive cleansing that's occurred. And there's been like a separation of Bitcoin and crypto. I feel like there's more of an understanding of what separates them. CZ is just the latest. I mean, it was wild. I think it was pretty bullish how it all played out because there's a lot of uncertainty around that investigation, and it was kind of a dark cloud that was hanging over the market. Could have been a lot worse, but they're going to keep Binance running, and that won't be like systemic in terms of like the market liquidity or anything like that, and just kind of slap the fine on them. And in the end, I thought it was kind of a great outcome in general. So the market could kind of like digest that and kind of move past that uncertainty.
Is Binance okay? Like this, like a $4 billion fine or whatever? Like, is Binance okay, you think?
Yeah, I think they'll be able to pay it if that's what you mean. Like
Wow.
$4 billion.
I don't think
That's a crazy. That's They're just picking a high number. There's no
Treasury
number
wants
that
to
they
get
got
paid, so
Why? They could just print money.
well, so I like did a little bit of numbers on this, and there's a lot of like assumptions here. It's like back of the napkin math, but the last time that CZ like published like their profits was in 2020, and it was 800 million to $1 billion, and that was when their revenue was 5.5 billion, and in 2021 that quadrupled to $20 billion in revenue.
Wow.
And if their profit margins just stay the same, you got to think their profits were almost $4 billion in just 2021 alone. And then also their BNB token, when they launched BNB, they allocated 40% of the token to themselves. And
Classic.
it's blown up in market cap. They have $16 billion worth of tokens that they just printed out of thin air.
Yeah.
And obviously, you got to take
Alchemy,
into
dude.
account liquidity. Like, they can't just dump that all in the market because the price would just tank. But yeah, they printed $16 billion out of thin air. So
And got away with
you
it.
know,
Well, they thought, like CZ thought he was going to get away, but
well, there
Looks
is
like-
an SEC lawsuit still. So there's probably another fine coming their way.
the company is totally separate from Binance US, right? Binance.com. How?
Well, that's what they alleged. That's they tried
but
to.
it wasn't.
Yeah, there was a lot of commingling
So
going on.
maybe you guys don't know the answer to this, but like what I was wondering is like how did they get CZ? Like CZ's not a U.S. citizen. Like how did they get him to like serve jail time in the U.S. and like extradite him, or like how did they like get him to follow the U.S. law and get punished in the U.S. because of and why did he agree to it? You think they couldn't just be like, screw you, I'm in China, dude, peace.
From my understanding, like this has been like years in the making that they've been talking to each other. I think since they were allowing U.S. customers to use their platform illegally, it doesn't matter where you are. Like if you're servicing U.S. customers illegally, then they can go after you. And I think maybe
Okay.
CZ just didn't feel like living his life on the run, like looking over his shoulder.
Well, he's going to be in
And-
jail, so
Yeah, but he's going to retain his ownership of Binance. I mean, like you could sit in a cush jail in the United States for 18 months. I mean, it's like a freaking hotel. And he's
I don't know what jail
he's
you've been
still-
to.
well, it's like a two-star. I mean, dude, these rich white collar criminals. Are you kidding me? Like
Yeah,
when you're rich, you get to
it's different.
hang out outside. Yeah, like it's not that bad. I mean, I'm speaking like somebody who's never been to prison.
This is very foreboding, boys.
This is what
to
I've
hang
seen in
out outside.
documentaries.
Every once in a while, Sam, you know it's great. I can go outside whenever I want, dude.
Yeah, well,
Freedom
yeah,
pretty cool.
prison. Yeah, this is what I learned from like the Bernie Madoff. He's like, it's not bad in here.
It's not that bad.
But that's what like Martin Scarelli.
Oh
and-
yeah,
and you guys
Scarlett,
know
yeah.
Do Kwon. Hey,
Oh,
Do Kwon,
dude, that-
jail's not that bad, man.
Jail's not that bad. Yeah, they got Do Kwon too. That was another one. The only one they really haven't gotten is Mashinsky.
Well, they got him.
They got they.
Oh, they
well,
got him.
they haven't like sentenced him. Well, I guess maybe they haven't sentenced Do Kwon either. But
I think he's like
Big
Like-
trouble.
obtained or whatever.
yeah,
I think he's in cuffs somewhere.
Yeah,
Yeah, I
bad
mean
luck.
that's what I'm saying. There's been a good cleansing. I think you're getting like a cleanup of the industry. All these bad actors who are just like disregard any
happened
kind
to-
of laws. And,
was
they're
2019.
being replaced. Yeah, they're being replaced by the old guard, which I mean
Larry Fink.
is good and bad. Well, I mean we'll see. I guess it was inevitable. So, but
Yeah.
it's interesting. It's like the banks are coming in to Bitcoin, which is
Right.
a very weird thing.
now it's like the big banks are coming in. All the crypto renegade guys are gone.
Yeah.
You know, and it's
It's them at Coinbase.
I don't know if that's good, because the whole point was to kind of like not be part of the banking system, and started a new banking system, and the banking system was like, well, we're going to come and up it. This land looks really nice. We're going to come and take advantage of this. So it's now we're looking at like, okay, yeah, we're just are they going to take over control? And one of the things I wonder is, if with the ETF being ushered in, like those coins, once those ETF share creation units are in, they're not moving. And so like BlackRock's just going to have tons and tons and tons of Bitcoin. And like you were saying earlier, like about for ETH, like that's like a consensus mechanism to own the tokens, right? Like at least with Bitcoin doesn't control the consensus mechanism to have a shit ton of them. But like, is this like kind of not like, I wonder if it's a Trojan horse to not, it's not actually good. Like it could be really bad. And I talk about this from a self-custody perspective a lot. Like Sam, like this is like for both of us in our bit lines of work, like this could be, people are going to be buying the ETF instead of spot Bitcoin. People are going to be storing their ETF, their Bitcoin holdings in Charles Schwab instead of using a multi-sig wallet, So like, I think there's some real concerns about like the ETF is like a double-edged sword. Do you guys have any comments on that? No.
The authorized participants that are allowed to create and redeem shares of these ETFs are going to have a lot of power, but
I don't know. Like, there's always going to be like benefits of self-custody over holding an ETF, but I think it's like different strokes for different folks, and it's inevitable. And there might be some risk like that, but that's the risk you take by holding an ETF. Like you don't have self-custody, so there's a counterparty risk.
Right.
And there's fees. There's also like tax consequences. So, just one thing I've thought about is self-custody, like Bitcoin, might have changing like tax policies around it. Whereas like an ETF will always be taxed like a security, like just like any other security. Like you see that in Portugal, there's no capital gains tax. Germany, after 12 months, there's no capital gains tax on Bitcoin. But the ETF will always just be a security. So there might be like tax benefits to holding actual Bitcoin one
physical
day,
spot,
which would be cool. But in terms of like protocol risk, like I don't really see it. Like personally, I don't believe in that like manipulation of paper Bitcoin thing. Like authorized participants, yeah. But since there's going to be multiple ETFs, it just seems like they kind of check on each other a little bit or something.
It's like a competitive. It's a competitive market force where GBTC is charging high fees. Osprey comes in and charges lower fees, and then BlackRock will actually allow
redemption to self-custody, which is what you see in the gold mining ETF space. Is like there's some gold mining ETFs,
and from a tax perspective, that's preferable, right, guys? Because it's like if you can just, this is one thing I've thought too. Like, what if you could get a redeemable trust, like GBTC, but you hold it in their custody for a while until you're comfortable, and then you could withdraw it without creating a taxable event for yourself. That to me seems like the sweet spot, because you're not forcing people in day one to use hardware wallets. But at the same time, you're not forcing people into a future taxable event when they want to start using it later.
I agree.
Yeah.
Is there is a redeemable one today or no?
Didn't you say OnRamp is doing something like that?
Yeah, I think it's only for accredited investors, though. I'm talking about like for like the general population. Like, there's no like public product that like lets you do that, right? Like, it's only for like accredited. Nobody who watched this show is accredited. It's like, well, I guess technically you guys are because you're financial license holders. So,
oh yeah, because they changed
the series. Rules. The series gives you the accredited investor title.
Yeah.
Yeah. Anyway, like I think the spot Bitcoin ETF is just good news, man. Good news.
All good news.
I honestly like. I think it's overblown, some of these risks that people talk about with it. I think the ease of self-custody and the volatility kind of help.
All right, what about the fee market, though? Because now, like, okay, now we've got... I just see everything encouraging the wrong thing. Like, ETF's going to come out. It's going to be easy. Aunt Sally's going to do it. It's going to have low fees. Her financial advisor is going to put her in it. She's never going to hold self-custody. It's not a problem tomorrow. But 10 years, 20 years from now, it might be a problem, a structural problem for Bitcoin, especially if that trend continues more and more and more, because people aren't holding their keys. And yeah, just like maybe we have 21 million coins or something like that still, but like a big part of the value proposition for Bitcoin to me is lost, right? It's supposed to be a peer-to-peer money, not an asset that sits on BlackRock's balance sheet like all the homes in urban Denver. Empty, by the way. That's like I don't even know if we've won. Like I would say we've lost. Bitcoin goes to $10 million, can't withdraw it. I don't know that we really won. You guys disagree, or?
No, you need to be able to preserve the right to take self-custody. I feel like it's incredibly important.
What if you can, but there's just the incentives.
No one wants to.
Yeah, like the incentives persuade you that no one wants to. And it's like, and that's like how I think is more likely to happen. They won't tell you can't, because Americans are like, oh, you told me I can't? Well, watch, but like incentivize them financially to do something and they'll do it all day. Like Colorado made the electric vehicle the state tax credit. You got like an extra credit. And now like we have the highest EV numbers in the country because they made it financially incentivized to do so. And if you're financially incentivizing people to hold it through the securitized vehicle like the ETF, and then you're technically incentivizing them or discouraging them, disincentivizing them to take self-custody because of the obtruseness of hardware, or because mempool fees are like unapproachable and it costs you a fortune to send Bitcoin. Isn't that a problem? Like that's something that concerns me about like this having cleared out a lot of the bad actors. I'm not so worried about the scammers anymore, the ones that are obvious. I'm more worried about the complacency being ushered in that. Like, it's just going to get too easy. And Bitcoin operates effectively because of incentives, right? So if we're like skewing or like modifying those incentives, I just wonder like if like we're going to look back and say like, oh wow, actually, coins aren't moving on chain because nobody's taking self-custody. Like everybody's interacting with Bitcoin in a trusted way.
Well, I think like also like the ETF, like Bitcoin's so much more than just like holding. Like at least down the road, I think it will be as well. Like there'll be all these different applications where you'll be able to use it and you'll be able to transact on it. And so you have all those like different incentives to hold spot versus just some paper ETF. Like that's a big difference, right? Like applications and using it for payments, Lightning, like all the benefits that Bitcoin will bring as innovation continues to get built over time. That none of that's going to exist on a spot Bitcoin ETF. It's just like a exposure to the price. So,
but isn't that what most people will care about?
Well, yeah. So I guess like I'm in my head, I'm thinking, okay, people are just like going to go for the ETF. Like that's that makes a lot of sense now. But Sam, that's a good point. Over time, like more applications around it are going to exist, and it'll be easier to pay in it. Maybe easier from a tax perspective and recording that so you could pay taxes correctly and all that. So like and who knows, in the far out future it could be the reserve currency of the world, so then capital gains isn't a thing. But I guess we might be in that unique kind of period where we get it, and a lot of other people are waking up to the value of holding it, but it's still like before people have woken up to the value of its other utility as a transaction vehicle.
We're in that store value phase before the medium of exchange, right? I've talked about this a few times. There's like the collectible, the store value, the medium of exchange, and the unit of account. We're in like in between stage 2 and 3. I think we'll be in that medium of unit of account stage for a while until the price just significantly, or really like until the purchasing power of dollars are no longer confident. Like earlier, I was saying, like, I think we all agree that we keep some fiat for monthly cash flow for bills. It's just not practical to be in this like on zero fiat all in Bitcoin mentality. If, let's say, month over month we were getting like 10% inflation, like just inflation really like started getting out of hand where your rent, people are like not wanting to lock in. Like landlords don't want to lock in you for a year lease because they think they're going to need to raise the rent price before the lease terms up. Like if we get into that kind of inflationary environment, you're asking for raises more than once a year. I could see then like we start using Bitcoin as a medium of exchange because people won't be able to plan their financial life around using dollar as a medium of exchange. But until then, kind of going back to incentives, there's no reason to, right? There's no reason to use Bitcoin as a medium of exchange. It creates a taxable event in the United States. You got to figure it out. Barely anybody uses it, and and right now the fees are so darn high. It's not even cheaper to do so. This is what I'm concerned about. It's like the incentives being forgotten about, right? Like the reason we kept the block size small was because of incentives. And not to like, I'm not abandoning Bitcoin or anything. I just simply like am curious if what we celebrate as good for the industry now and good for adoption now may in fact be, we may look back on it and be like, ooh, that was like a mistake. Like that was a moment like where we could have went the other direction and really pushed freedom, but instead we pushed convenience, right? Like we're always like tiptoeing this line between convenience and security, and there's no perfect answer on where that is, but this is life, boys.
Convenience.
Make decisions.
I mean, that's what the CBDC is too. It's a convenience. Unfortunately, a lot of people choose convenience. It's the reality of the situation. But
yes.
I think there'll be a small cohort that will always appreciate freedom.
Yeah.
Yeah, definitely. Well, FedNow is a thing. There's another thing that happened this year.
Yeah.
What is FedNow?
It's basically like ACH system 24/7.
So is that already in effect?
It is, but I think it takes banks and institutions time to sign up. So, but I think over the next few years, we're all going to notice like ACHs will act much like wire transfers, but like Sunday night or Saturday night, you send money and from one bank account to another, and it might arrive.
Great.
FedNow, I think there's a lot of confusion with FedNow because like people say it's a CBDC, but it's not. It's like a real-time settlement system between banks. There's over like 70 real-time payment systems already in operation around the world. The United States is just behind.
Oh,
very behind. Like the UK has had the fast payment system since 2007, like something ridiculous. Maybe a little bit later than that. But like what you could think of the FedNow as, I think, is maybe like the road that a CBDC could maybe function on top of. Like there's different pilot programs for the CBDC, but it's not programmable. Like it's just the same system 24/7 like faster, but there's no like programmability within that. It's just like the same dollar system that we have, but you can't program the money to say like, Zach, you can't spend your money between 5 and 8 p.m. On Saturdays because, we don't want you eating then or something like that. You can't do like if then statements built into the money.
But that's the CBDC could. Is that the idea?
CBDC is theoretically like programmable. So like a great case study is Nigeria, because Nigeria had a FedNow like since like 2011. So this is how far behind the United States is. Nigeria had one of these things. Yeah, it's called like the NIBS or something.
The
like
NIBS.
the Nigerian Instant Payment System. NIPS, maybe. I don't
Gotta
know.
watch out for the NIPS.
It's like something like that.
It's definitely NIP. It's definitely
so
NIPS.
like, but this like, so Nigeria also has the Naira, the CBDC, but they weren't the same thing. Like this is what like Bitcoiners conflate the two, but like the fast payment system in Nigeria happened years before the Naira came out, but the Naira was a complete failure. Like, there's little to no adoption. Nigerians are suffering from hyperinflation, and the Naira is just like total failure. Nobody wants the CBDC. But what they did to try to like boost the adoption was they actually integrated the two. So like the Naira moved on top of the Nigerian payment system. So they're FedNow. And so that's what you should think about FedNow. Like, I think it's more like the highway.
Yeah.
Or like some people have said it's just code, so it's like a minimal viable product. But, it's just not a CBDC as it stands right now. But it could like kind of like assist one in the future, I guess is what I would say.
So like right now, the currencies are the vehicles, and FedNow is the highway, and Bitcoin, Bitcoin's blockchain is space. And Bitcoin are flying cars, and the dollar is a 1970s Datsun.
Makes sense to me.
Yep. Okay. There we go. So
The highways are the highways.
So you could, in theory, just because the FedNow system is about, doesn't mean that we're all going to own nothing and be happy yet.
Yeah. No, that's
coming though. It's
honestly,
still coming.
it's just like it's a kind of like a pet peeve of mine, like, because it makes us look bad. I think when we say like FedNow is a CBDC, it's just like it's kind of misunderstanding, and like you can look at me and be like, oh, you're being naive, like it's just like the first iteration of it, like, and I get that, but like you don't understand the nuances here, like you're just kind of like preaching to this like anti-CBDC choir, but really like you should be preaching against the pilot programs, actually studying a CBDC instead of like harking on the FedNow program, which also like people were like the timing of it. They were like, oh, it's the perfect timing. The banking crisis is happening. The FedNow is happening at the same time. And I was like, this has been in the works for for years. Like, and they always planned on launching it in the summer of 2023, at least since like 2021. I think they announced that.
Right. So they engineered the banking crisis to happen like before that.
Yeah. I don't know. If anything, like the interesting thing about FedNow is the banking crisis, because it makes it faster for deposits to leave banks. And so that was like one of the surprising things, because like social media made it so fast, the communications. And that's how you had like bank failures in 48 hours, because you had like these bank runs. Now FedNow even like accelerates that. And so it even leads to more potential instability, because it's 24/7 fast, like real-time settlement of deposits. So they can just leave whenever they want, which puts the banks in even a more precarious situation. I don't think the regulators really prepared for that technology and the instability of the banking system. So that's what I think about with that now. Yeah.
It looked like a shit coin that got, open, went from like down 99% in the morning, right? Like somebody found out it was a complete rug pull and it just is gone. Like these were publicly traded, major banks.
yeah, that's what happened at Silicon Valley Bank. Is they were set up for electronic transfer, and over that weekend, VCs were coming out and being like questioning the efficacy of the bank, and they
Right.
just lost most of their deposits in a weekend.
Question. So is this FedNow system, right? Is this not just another thing that, because we said like, all the banks don't have, like, are not using it, right? So is this just not like another thing that only the biggest of the big banks have? Like, I think Chase is in it.
Some of them, yeah.
All the big banks are in the pilot program of FedNow. It's just like they always get the favoritism.
Well, they have the technology to
Money.
like the smaller banks don't have the teams or the funds
Right, and is
the
this
tech.
that's a moral hazard? Like, this is because this is where they don't have the technology, so they don't get the new stuff, so they don't attract the most competitive services, so they don't get the revenue, so they don't get the money, so they are not too big to fail, and like it's just like I don't see how. I mean, correct me if I'm wrong or if you guys disagree, but like I think the Fed made it pretty clear this year that they don't want small banks. Like, they want the big banks and only the big banks. They don't really have a place in the industry for regional banks anymore, small, medium, local town banks. Do you agree? Disagree?
I don't think it's like a matter of want. I think that's just the conditions, and this is what's happened. I think America is unique in the sense that we were a kind of ground up banking system from the beginning, and Sam could probably speak to this a lot better than I can, but the way I understand it, there used to be like 40,000 banks in the US or something, and now there's like, I'm totally making these numbers up, but now there's like 10,000 banks in the US. But if you look at like other countries, they have like 300 banks or something. So like we have so many banks, and a lot of them are just small, and they're just like these community banks, and they know their depositors, and they like, they specialize in just providing loans to farmers or whatever, and they're just not that sophisticated and not as sophisticated, and then I think just the conditions of this year where the Fed dot plot was saying basically 0% interest rates forever, like back to how we started this conversation. Banks just took kind of stupid risks, but they thought they were doing the right thing based on expectations for where rates would be in the future. So they were happy to lock in that 2% for 10 years. And then now it was just a crazy rate hiking cycle, and small and medium and community banks just got it's just bad conditions for them.
Where are we? Where you guys think we're headed in the next year, next 12 months with rates? And is this banking cycle coming like for round 2, or was like a one time thing? Now they've got the bank term funding program that won't happen anymore. What do you guys think?
I think rates. Well, people think the rates are going to drop from here, which is possible, maybe probable. But like, I also think there's a scenario where inflation could remain sticky, and the bond market could continue to rise. But at the same time, I think the Fed will cut rates eventually. And so being like long on the short end of bonds makes sense to me, but like long term, I still think like rates will rise to higher levels given the amount of debt in the system, and the inflation will remain sticky. But I just think Jerome Powell talks a big game right now, saying like, oh, we're not thinking about rate cuts, but like, let's see what he does when corporate bankruptcies rise and the unemployment rate rises to like 4 or 5%. Let's see what he does then, because I think they're going to do the exact same thing they've been doing. And I think they're going to cut rates, and I think they're going to return back to their quantitative easing policies.
Burr.
So when that happens, yeah, that's when Deutsche Bank recently came out and said the S&P is going to hit new all-time highs in 2024, and I'm like, well, yeah,
in dollars,
like there might be a bad period before they eventually go back to their QE and whatever, but then you're going to see the stock market and Bitcoin absolutely rip in that scenario. And so
let's go.
I think rates will maybe fall But like long term, I think they could rise. It just depends. It depends like if they'll find buyers at certain yields. I mean, that's obviously like on the long end. And I think when you look at the debt, more and more bond investors are saying like the math doesn't really make sense here. We're going to demand a higher yield to take on this risk of borrowing, from this basically insolvent government for the next 30 years. So like, hey, I'm going to lend you money for 30 years and you have $33 trillion in debt.
What's
Bro, you're going to pay me a little bit higher interest. And so like if yields rise, then it's an interesting scenario. But I think that's more like longer term. I do think rates come down. But this is a long-winded answer. But like if rates come down, then something bad has to happen, like to make them do that. And so like people say
they're
that
not going to lower rates until there's a reason to.
Yes,
they're going to keep the rates high. But at the same time, like given that we have all this long-term debt that we've issued, I guess that doesn't affect the previous debt that we've issued, right? Because those are not floating rate mostly, right? They're all locked in fixed rates based on the issued rates in the past. But if we raise rates, the new bonds that we issue, because we have to issue new money every month to survive as a government, aren't we issuing those new bonds at higher rates then? Right. And so it's making the interest expense more over time.
Yeah. So when Janet Yellen, like when they raise a lot of money, they actually raise it on the short end instead of the long end. What is what they should have done, but they raised money on the short end, so they have to roll over like a decent amount of their debt at these higher interest rates. So
can you explain what that is, like simply?
I mean, maybe
either of you.
So like when the government has to borrow money, they basically have all these bonds, and when they roll them over, they have to like basically they have the same spending, so they basically have to roll over the bonds at the higher interest rates at the market rates. When they initially bought the bonds, they were at much lower rates, but now they have to reissue them at much higher rates, and so that makes it much more expensive. And I don't know,
like taking out new debt to pay off the old debt, basically refinancing, but like refinancing in a way that you don't want to do. You want to refinance with lower rate debt.
Right. Yeah. The Treasury was like running a big profit for like most of the last decade, and now they're losing a ton of money because just like anyone, like the banks, they bought debt at a low rate, and then the new debt being issued is at a high rate. So essentially, their holdings is going down too, and they're losing money. Just like the same dynamics as a bank, but like. And I just kind of want to like tie in Lyn Alden's thesis on this is like she likens this period to like post World War II when debt to GDP was around the same level for the US. And how we got out of that is, and again, Sam probably knows these statistics better than I do, but like from 1946 to 1955, we ran like average inflation of like 13 or 15%, and yields were like 4 or 5%. So negative real yields, meaning anyone who was purchasing bonds post World War II was just losing their shirt. Similar to now. And now we're in this very short-term period where real yields are positive again, meaning you can get 5% on short-term bonds, you can get 4.25% on long-term bonds. Go back a month and it was actually you could get 5% on long-term bonds. It was crazy for a minute there. You saw long-term bonds really sell off, and you can get 5% coupon on 20-year plus debt in the U.S. That's dropped to like 4. But the point is, real yields are positive for the first time in a while. Meaning you can buy technically higher than the rate of inflation. You can earn more on the bonds. Well, that kind of isn't great when you run huge deficits and have a huge debt load. what the government really needs, what America needs at this point, is negative real yields to get out of this huge debt burden. And so you basically have to keep yields lower than the rate of inflation for some time and screw the bondholders to get back to a debt to GDP that's reasonable, so you can continue to have the world reserve currency. And so I agree with Lyn Alden's theory that like the next 10 years, like we're going to have to get to a point where yields are consistently below the rate of inflation. And that's what's going to make the debt to GDP, because GDP is nominal. GDP will grow as inflation grows. But yeah, I don't know if that all makes sense.
So it does. So it's like a slow leaking of the air out of the balloon instead of a big pop. Yeah. So if it's a deleveraging essentially, right? But I mean, it's
deleveraging by screwing the bondholders.
It's theft, right? Like they're screwing you. But I guess the alternative is hard landing. Which would be worse.
Exactly. Great Depression is the alternative. So I think owning equities, owning Bitcoin is like a fantastic way to play the next decade. And I wouldn't really touch bonds other than a quick trade here or there. I thought long-term bonds, if you look at TLT, ticker symbol TLT, the iShares long-term bond ETF, like that was kind of a big deal a couple months ago because it had sold off so hard, like the biggest in U.S. history, including Civil War and even the Revolution, if I have that correct, following our independence. So very significant. Now TLT has risen a lot since then, which means people have gone out and said, "Hey, I want to lock in now 5% for 20 years. That's great. That sounds great." But the question remains, America is insolvent. Like we can't have real yields. We need negative real yields.
So take the zero yield in Bitcoin as a gift. At least it's not a negative yield.
Hard assets rock. Yeah.
Hard assets, real assets.
Speaking of real assets, Beau, Sam, what do you guys think about the housing market as young, dapper millennials in our 30s? I think, Beau, didn't you just buy a house, or you're buying a house? Sam, I know you moved. Are you renting?
I'm renting for now. Yeah.
What is up with this? Like, we are the demographic that's supposed to buy houses, and I think that it's a huge function of the interest rate environment. It's a huge function of like where we're at today and like both the debt markets. And as much as we love Bitcoin and real assets, like you can't live in a Bitcoin. I say this all the time. You know, like is like I don't understand how the housing market has not just absolutely plummeted. Do either of you guys particularly follow what's going on in like the residential or commercial real estate? And is there an end in sight for our generation, or are we going to just have to wait till it all crashes? What do you guys think? Or is there a third option?
I'll just jump in here real quick and say that I think there's like short and medium term, issues at play, and home affordability is at an all-time low. If you look at home prices and interest rate and mortgage rates make homes so unaffordable. But I would say the longer term reason for that, and the reason why I think homes like Bitcoin, like equities continue to do well, is the reason we're all talking about is, would I expect house prices fall over the next couple of years or stay the same while other things rise more? Sure. I don't think now is a great time to buy a home, but I do think that the reason why homes are affordable and likely to not get cheap in real terms is because it's a real asset. It's better than a lot of alternatives.
Still can't be printed out as fast as they can print the money, right?
Exactly.
And it's like it's a positive, and you can use leverage to acquire it, which gives you leverage on the money printing in a way, because you're leveraging your exposure to a real asset, which should benefit inversely based on how much money they print or the rate of money printing, right? So the faster they print money, the more house prices should somewhat increase in nominal terms because they're not printing houses at that rate. And then the
But
more
that said, they could technically have a huge building boom, and that throws off the supply and demand dynamics, which right now it's working in the opposite way. As I understand it, multifamily homes are being built, like apartment buildings are being built at a pretty high clip right now, but single family homes aren't. And millennials, a big generation like the boomers, and we're moving into single family. And so, uh, you know, don't want to get like too in the weeds, but I guess my take is like this whole conversation could change if there was a huge building boom.
there isn't in this neighborhood.
Yeah.
Like there's like 9 high rises coming up, but they're all like commercial and mixed use. There's no like single family homes. Maybe our generation as a general cohort doesn't like the whole suburban single family home lifestyle.
Yeah.
Sam, what's your take on real estate?
Well, I agree with like the home affordability, and then like most people locked in these like low rates for many years. I think like the effective interest rate on long-term mortgages is like in the 3s. So
Really?
yeah, so I mean, these people aren't going to move. Like, why would you move? Like, you'd have to be really like you'd have to
Right.
get a new job or like some kind of like family thing to move.
Even that.
And like basically
Rent.
almost over double your mortgage payments
Right.
by moving. And so you have like basically that affects the supply, which is what Beau was talking about, was like nobody's moving. And so there isn't that much supply. And that's why you haven't really seen house prices fall, because nobody wants to trade their low mortgage for a higher mortgage for like basically probably half the, like less house, honestly, because like the
Right.
housing prices have basically just like risen across the board. And so I think that those dynamics is what's causing the house prices kind of remain elevated. And I don't see that like changing like very quickly. I think you could see a building boom, but unless you see rates start to fall, like, and people start to like, it's tough to be a new homeowner right now. I mean, there's no way around it.
Right.
I mean, I just don't see that changing very often. Now, housing is a real asset. It's a good way to protect yourself in inflation. You got to live in a house. So I totally agree with like owning a house is important. There are things compared to Bitcoin that Bitcoin has an advantage of, like it's more liquid. Like you can't pick up a house and move it, right? There's like property taxes. There's maintenance costs. It could get wiped out in a natural disaster. You know, Bitcoin, not really the case. There's reasons why you call Bitcoin like pristine property for those reasons. But I still think real estate is a good place to be if our overarching thesis of like an inflationary regime that we're entering is the case. Then I think real estate is a good way to protect yourself. But obviously, it has trade-offs with Bitcoin.
It's a liability masquerading as an asset.
Tell me you can't move a house. Man, it gives you more leverage than any other asset too. Like nowhere's going to give you 20 to 1 leverage on your Bitcoin. At least not anymore.
Yeah. Yep.
But it's a depreciating asset though, right? Like from a quality perspective. So that's where I always have trouble like getting behind buying a home. There is a nice value and flexibility that renting affords, particularly in uncertain times.
I agree completely. But have you heard of Detroit?
Yeah, see that like you guys y'all moved to less expensive metro areas. Was that, Beau? I know yours was like part like family related, but like, is that did you when you guys moved to, like, Beau, did you guys buy and like was that part of the reason? Was like Detroit's a more affordable metro area than somewhere in the West, like
Yeah,
Denver?
we moved here solely because my wife is pregnant and this is where her family is. So we're here for the support system and
There's gonna be a little Beau.
girl though.
There's
Yes,
gonna be a little Christina.
a little Christina. Um, no, I mean that's why we moved here. But I would say for places to buy a house, I felt more comfortable buying here because um, house prices have been so depressed for so long. And that's not to say, it's guaranteed Detroit's going to have a renaissance or anything, but I do think there's more risky places to buy in the country right now. And to that end, like we're talking about home prices being unaffordable and going up and up and up, but there are metros that home prices have fallen a lot in the last year and a half.
Is
Boise,
Detroit one of them?
no, absolutely not. I mean,
No.
Detroit's never really saw a boom in the last cycle, but Boise, Las Vegas, Austin. I think Austin home
Yeah.
prices have fallen by 12%. So,
Really?
I mean, there are parts of the country where home prices are down 10 plus percent, and that's significant. A lot of people only put 5 or 10 or 15 or 20% down. So when your home price falls 15% in the first year, that's
You're
not good.
underwater.
Yeah.
Negative equity. That's when people start walking away from their homes, right? That's what happened in '08. Like you have negative equity and you're just like, why even continue to pay the mortgage? Because I'm
Well,
now.
it's different than that because same reason Sam said is someone might have bought a house in Austin and locked in a 3.5% mortgage, and they could be technically underwater. But are you going to walk and go buy a shitty house somewhere else
Right.
and have a higher mortgage payment? Probably not.
Right. So you're still paying the payment.
So
'Cause it's
until
the
unemployment ticks up, until those people lose their job, they're going to be in the house.
Right. And then when they lose their job, then they're going to walk
Yeah.
because they're paying. They can't
And
afford
then
it, and they're
and
losing.
then homes flood the
And
market, and then
pukes.
prices
Right.
come down. It's just, are we going to see that?
Are we
And I
there
know
yet?
if, at this point last year, I would have said absolutely, it's inevitable, it's the cycle and all that. And I mean, I'm not saying it won't happen, but it's crazy how resilient the economy has been, and it's crazy how resilient the employment market has been. People aren't losing their jobs, and one thing that people don't talk about, and I'm just going to pivot the conversation a little bit, is the Inflation Reduction Act and the CHIPS Act are, and this is part of the reason why the deficit's so high, but we're like injecting almost $2 trillion, like $1.5 trillion in the economy right now. And I think it is benefiting like construction and certain sectors. And it's hard to have the economy weaken that much when that much money is basically being printed and injected in the economy. I don't think people talk about that enough.
Yeah, I forgot about those things. The Inflation Reduction Act. They just, I mean, you can call it whatever you want, but it is money printing, right?
The Inflation Addition Act. Yeah.
And the
Yeah.
CHIPS Act is
Aptly named.
building foundries, right?
Yep.
Gonna need them with gonna need a bunch of foundries.
And you guys, I'm gonna stop apologizing for China. I'm totally over that.
You've
Forgot about
grown.
that.
I've grown
think-
up.
Yeah, I think last year was my China phase too. I was really into wok cooking last year, so still am, but less so.
They're fucked. Yeah, sorry. Okay.
China, it's a black box. I have no idea what's going on. Never do. They're so secretive.
They're even hashing now. Somebody's plugged in. You
They
saw
never
them.
stopped.
What was the whole China mining ban? I mean, didn't they kind of stopped for a bit because the hash rate
I think
plummeted.
they had like 20% still or something like that.
Well, somebody's
Maybe it was
plugging
just
in.
the miners were confiscated.
By Xi. The hash rate. Let's see. So about a year ago, when we did this, we recorded was 34. The difficulty was 34 trillion. And the hash rate was 230 exahash. Today, 1 year later, the difficulty is 64.6 trillion. So about doubled. And the exahash is 571 exahash, which is about doubled. Wow. Who's plugging in, man? I don't understand. Like, literally, I mean, I guess the price did go up a lot this year in percentage terms, but I mean, the price went up 100 and something percent, and the hash rate went up 100%. So I guess you're better off now than you were a year ago if you're a miner, but you probably are facing like the ASIC depreciation cycle, right? Like, because they cut the new machines that are more efficient now that are coming out, the S21. You guys seen that?
Did you see that Galaxy report, like the mid-year mining report that they put out?
No.
They estimate that it's from abroad, like it's like international hash rate
Right.
coming in.
I think so. That's why I was wondering if it was China or
Yeah.
Kazakhstan
Russia.
or Russia.
Russia.
Gosh, that happened this year too. There wasn't really a war
There's a
going
lot
on.
that happened this year. It's like
The
absurd.
banking crisis, the Russian-Ukraine crisis, the just stuff in the Middle East now.
Yeah.
What else? What else?
I don't know.
FTX. That was last year.
Well, the trial.
The trial.
Binance, Coinbase.
Kraken
lawsuits.
got.
Kraken lawsuit.
Kraken got. Man, they have just been fighting the good fight.
I don't know. Next year's gonna be even crazier.
It's gonna be
The
crazy,
election
man.
year.
It's gonna be crazy. The halving, guys. You pumped for the friggin' halving? It's pretty soon. It's soon.
I know less about mining than both of you, but all the hash rate coming online and the halving coming up, are miners' margins just going to go to shit?
Yeah, it's a terrible business. I say it in every episode. It's the worst business ever.
It's a brutal cleansing of inefficient operators.
As if last year wasn't that. Like, as if the last 2 years haven't been that. I mean,
Yeah.
in Bitcoin
Miners
mining, I feel like you trade like 36 months of hell for 12 months of fun. Which is like, actually, in Bitcoin,
Do you ever mine,
I feel
Zach?
like you do that. I'm mining right now with a little future bit.
Oh, okay, cool.
Yeah, just to Denver Bit devs. We have a mining pool set up for Denver Bit devs that you can
nice.
donate hash rate to. It pays for the pizza and beer that we do at the meetups.
Cool.
Yeah, it's pretty sweet. But it's not for the faint of heart, man. I will say that. I have been following the miners closely, and my rendezvous affair with Destiny is over. I'm about done with bag holding all of these guys. Next year's the year.
I think generally mining commodities isn't a great business. Like if you look at a gold
Right.
miners ETF, they're like flat over the last 15 years, and gold's like making new highs right now. Like
Same
it's just-
principle.
Yeah.
They're capex heavy. They're not a great business. Except with gold, they don't cut the supply in half every 4 years programmatically. Like, what the hell, man?
Yeah.
You guys got halving plans? Like plans for the halving in April?
Maybe in May.
It's not gonna
don't.
be in May.
No, I said maybe in May. That's my plan.
Oh. Well, what about April?
Nothing in April.
Getting
420.
ready- getting-
Yeah, 420.
It might fall on 420, boys. It might actually fall on
That
420.
would be poetic.
I think, let's see the date. Currently, Mr. Clark Moody's dashboard has us, let's see what he has us guesstimated as having. If it's at 10 minutes, it'll be April 23rd. If it's at 9:40, it'll be April 18th. Might be 420, dude.
That's so
might
funny.
Might be 420. Sam, are you you got plans for the halving? We'll do it.
I don't have any plans yet for the halving. I hear there's like multiple parties, and we will see. Don't
We'll
have
do a
anything set in
streamathon.
stone yet.
Do a 24-hour streamathon.
It's gonna be interesting. It's crazy that it's already another halving. Like I remember the last one. 2020
too,
does
man.
not seem 4 years ago.
It doesn't.
Not
Feels
to
like
me.
it's been a long. Yeah, I mean, it both does and it doesn't, right? I think as we get older, like it seems like it's both been yesterday, but also that so many things have happened. Like
Pandemic. That was a crazy time. Pandemic.
We
was
didn't
a
work.
Wild experience.
Yeah, like, but that feels like a long time ago. Like I've
Yeah, I
made
guess.
pretty much all my friends that I have close contact with today, or literally aside from Beau, like for the most part, were met after the pandemic. Neither of us worked. You were a physical therapist when I met you.
Yeah,
You
it's
know?
true.
Like we were like things were a lot different then. I mean, yeah, it's like we still remember it fresh in our mind, but like things like we weren't like radicalized. Now we're radicals.
Super radical.
Super radical. I feel a little less radical than I used to be.
Yeah. You're a little more tame.
Yeah.
Are they have a kid on the way?
Yeah.
You got you just have a kid on the way and you all automatically become more
Non-radical.
docile.
No, I do think that COVID was it was like a weird blanket of just, I think everyone was a little psychotic during that period. And I know I was a little susceptible to certain ideas that I don't feel as radical about these days. I don't know. I don't know how to explain
Is there
it.
one
But,
in particular that you're thinking of when you say that?
you
Just
know,
wondering.
like kind of like Sam was saying earlier, like there's certain arguments that Bitcoiners make that just kind of make the Bitcoin community look dumb. Like he used FedNow as an example, but I felt like there were others that were like, you know, very linear thinking or just simple thinking around, you know, how things work and you know, like America's future, I think was kind of in the balance in a lot of Bitcoiners' minds, and then, you know, like the US dollar and stuff. And it's like, I think things tend to play out a little slower and a little bit, you know, there's a strong status quo bias in how the world works. And I think Bitcoiners discounted that for a while, and I was right up there.
You guys sound soft. You know, I gotten soft in your old age. Where's the young vigor? Man, I feel you though. I agree in a lot of ways on that. It's like you get older. I mean, we're not like old yet, but I think every year you get older, you get a little less tired of fighting, and like, just like it's Bitcoin, man. It's like it's a great thing. It's gonna be here.
Mm-hmm.
It's just money though, right? And like having kids, getting married, like things like that will certainly change your perspective and grow you out of those some of the you know, you hold those viewpoints super strong until you have no reason to anymore because you're holding on to something else more. Your priorities shift, right? Like taking down the state is no longer your number one goal. It's raising it's raising a family, you know.
That's fair. That's fair.
I think there's beauty in that, man. We'll wrap here in a few. I'm curious. I want to know like what you guys had. What would you consider like one thing that was like really the highlight, or if there's more than one thing, you name multiple. But something or a couple things that were like the highlights of your year, and something that you learned this year about yourself, about life, anything you read, you know, like. And then we'll go into 2024 predictions, and we'll wrap up.
For me, my I guess pinnacle event was going to Italy. Like I went abroad and traveled, and I thought that was very fun to do, and you always gain a perspective being in a different country, eating good food, and I learned that the American food is just so completely broken.
Yeah.
And kind of fell in love with like Europe, and just the culture out there is a little different. So that was definitely a highlight of my year. Always going to remember that trip. And then I learned that just last week that this was the 4th cheapest Thanksgiving of all time from the White House press secretary. So that was this shocking stat that I didn't know about. Checking out the grocery line. Surprising.
I'm thankful for that, for sure.
Yeah.
Where'd you go
That's
in
what you
Italy,
learned?
Sam? Yeah,
So we started out in Sardinia, and then we went to the Amalfi Coast, Tuscany, and Florence. And so
Awesome.
It was great. It was a great trip. I loved them all for different reasons. Very different places. But yeah, Italy's just amazing. I'd probably move there. Maybe I will. Who knows? I love it there.
I was there in October on the Amalfi Coast and
Oh, you were there
went to
too?
Capri and Ischia, the islands
Nice.
there.
Yeah, I was there in July. It was freaking hot.
Yeah.
Did you guys see a bunch of Instagrammers there? I heard that's all you see on the Amalfi Coast. It's just like
There was a lot of Instagrammers.
people just Instagram it. Like, hey.
I was reading this book called Where Are the Customers' Yachts? I don't know if you guys have ever heard it.
I saw it. I retweeted that picture of you reading that.
I was looking at all these yachts. But
they're right
man,
here in the
I
Amalfi
love
Coast.
the food there and the what's it called? The lemon ice
Limoncello?
things. It
Or
was
no,
just
just
amazing.
lemon
I don't
ice,
know.
yeah.
Do you know what I'm talking about, Bo? Like
Yeah.
you get the lemons and you know what I'm talking about? You
No,
were there?
no.
Oh my god, what were you? There's lemons everywhere in the Amalfi.
Limoncello.
Yeah.
That's what I saw.
Well, for sure. But anyway, it was a great trip. What about
Yeah.
you, Zach?
Lemon Italian ice. That's what the
Yeah, there's like a name for it, but yeah, basically. It's like
That's
an
what this
actual
is.
lemon with like lemon ice inside of it. It's delicious.
lemon
I think
ice.
they grow. I think lemon is
Lemon
like
ice.
their major export around the Amalfi Coast. Type in Amalfi Coast lemon ice. Type in that. There you go. That's what I'm talking about.
inside of a lemon.
Yes. See, that's what I'm
All
saying.
right, that's fancy. That's fancy. Okay. Why are they so
Oh,
special?
you didn't have one of those when you were there?
No.
Oh
They
my
have few
gosh.
seeds.
You missed out. Missed out, my friend. I'm sorry.
25% of their volume is juice.
Wow.
What?
Zach, how about you? What would you learn this year?
Let's see. Man, I think my biggest takeaway is that it's all connected. It's all one thing. We confuse. We don't always see the results of our actions immediately or the ramifications. Maybe it's years that go by. Maybe it's weeks or months but everything has a force. And if you don't see it, it's acting silently. That could go with your habits that I think my highlight of my year is just getting in shape, man. Like I literally have been like focusing on that all year. And last year around when I turned 30, kind of at the bottom of the bear market, I was like, you know what? Can't control Bitcoin. What I can control is not being a lazy sack of shit. And I'm going to run out of time where it gets harder and harder and harder to get in good physical form. So it's something that I've really been wanting to do my whole life that, I think I learned about myself too, is that it's like those little decisions that you don't see the impact every day. But just, deciding to make those little changes every day. That's something that was really the highlight of my year, because I did it in a lot of ways. Like, didn't get so crazy in the market buying of Bitcoin, but I DCA'd every day, every single day, bought Bitcoin this year. And it didn't ever seem like much. But then I go and look back at how much Bitcoin I acquired this year, and I'm like, oh, wow. Like, this year was a blessing. So, yeah, I think for me, highlights are sort of the delayed gratification of hard work. And something that I learned was really the power of that, truly. If you stick to something, this is the third season of Value Stack. Same thing there. Like, over the summer, I took a break and was like, oh, are we going to do a third season? Like, it's, Bitcoin's, I'm kind of sick of talking about Bitcoin. Like, yes, we're doing it. We're doing it live, actually. We're doing it live. I wanted to do this episode live, and now that we got this Riverside stuff, we might actually start doing live streams on YouTube and Twitter and all. Nice. Want to do. So I think next year I'll get even more into it. But yeah, grateful for the power of compounding. I could have said in one sentence. So, what about you, Beau?
Thanks for attending my wedding, Zach. I remember the first thing I thought when I saw you is, you look good, dude. You look really good. So I noticed.
Thank you, brother.
Yep. What I learned this year, could say a lot of sentimental stuff. I think I knew I was going to marry my wife for a while. That was a beautiful experience, and now I have a baby on the way. That's awesome. Yeah, I don't know if I have anything too profound to say on that level, but I learned something about UTXO management. I thought the Bitcoin blockchain was broken, and I wasn't able to transfer anything. So thanks for kind of helping me through that, Zach. I was really frustrated trying to
I remember that, man.
Move my Bitcoin, and I learned what UTXOs actually meant, because for the longest time I thought I knew, but now I know, kind of. So that was good. And life's tight. And I guess, like, to tie something we were talking about earlier, like, sentiment shifts are just so extreme. And I deal with a lot of clients, high net worth clients, that are all kinds of people doing all kinds of different things, but it's weird being kind of pulled by their emotions as someone who's supposed to try to keep them centered, and also trying to keep myself centered with markets being as crazy as they are, and like where we were last year. Like, things were so different this time of year, and it's just wild. Markets are freaking wild. It's crazy what prices do, and I mean,
never a dull moment, man.
Look at Meta, like this time last
400%, 300%.
They were going, they were about to go bankrupt this time last year, and now they're like one of the leaders in AI. So I mean, like, I say that in air quotes, but like it just what the narrative people apply to price action, to life action. There's always a reason why. It's always easy to explain what's already happened, and things just happen, right? Things just go a certain way, and then we all ascribe meaning and try to apply attributes. So, yeah, I guess that's what I have to say. It's really nice, where Bitcoin is today. I feel like better pastures ahead, and I'm bullish as ever. 39.5. Wake them up, boys.
About to hit 40. We're about to hit 40K. We might hit 40K. 39.5, man. It's a big gain from last year.
Let's talk predictions. Oh yeah, Zach.
The wedding was beautiful, man. That was it was a great experience.
Yeah.
Happy to be there, and man, I miss both of you guys not being in Denver anymore. But I know you're out there doing your thing, representing.
Yeah. We have to come visit Detroit if you guys are ever in Detroit. Make it happen.
Yeah, probably not. Probably not gonna be. I don't know. You're there. I guess I got more of a reason to go to Detroit now than I did, 6 months ago.
Yeah. Well, I think we did this episode a little bit later in December last year, probably like midway through December.
Yeah,
And when we were talking predictions, I listened to predictions just before we recorded today, and we were all talking about the 45K level. So, good job, boys. We were
Nice.
Not far.
yeah.
40.
When Bitcoin was at 18, 45 was a far cry. Sam, you specifically said you're bearish going into the year, but you thought it was going to recover throughout the year. So you nailed that. My prediction.
Good job, Sam.
I said something about Circle teaming up with the Fed, and that couldn't be further from the truth.
Yeah, they're trying to shut it down.
What do we have for next year's predictions, boys?
The halving's gonna happen.
Oh yeah,
The halving's gonna happen.
Pop out. His prediction is one Bitcoin is one Bitcoin.
Damn, still true. Got no recognition for it. What do you know?
No, give yourself the applause.
Thank you.
Way to go.
Thank you.
Way to go.
Thank you.
Sam, predictions for next year?
I think we're gonna be at over 100K when we do this next year. We're in 6-figure range.
Wow. Well, I do think a spot Bitcoin ETF is going to get approved. This might be a little cop out, which could drive the price. I will say the Fed cuts rates and QE turns back on. And I think Bitcoin clears all-time highs. That's
Dude,
kind
we're
of.
going so much higher.
I think it'll go like somewhere between 70 and 100 by this time next year. I don't know if it'll be at 100 yet.
A wise hodler told me earlier this year, last cycle, everybody sold way too late. This cycle, everybody's going to sell way too early. That's what he told me. He says, everybody was like, I should have sold at 60K, and then they sold at like 30K, or they just didn't sell at all because they should have sold at 60K. He tells me that they're going to, when it hits 100K, they're going to be like, I'm not, don't fool me twice. And then it's going to rip to like 300K or something crazy. 400K. People are just like, what?
Pretty cool.
Yeah. I think I mean we gotta acknowledge like the erroneousness of like making these predictions because we're talking about
Yeah, this isn't investment advice.
well, I mean it's not investment advice like obviously, but like we're talking about quoting a Bitcoin in dollars, which we don't know how many dollars are going to be in circulation next year. So like it kind of like just harkens back to the whole pointlessness of fiat. Is like if you don't have a system with which you can measure the rules, well, then there's really no point in measuring anything in it, right? Because we don't know. So, like, yeah, sure, it might be 100K, but like, if they print, $700 trillion next year, like that would be a poor performance in my mind, or if they, taper the amount of currency in circulation, and we go to 50K, that might be good. So. I think it depends on the dollar amount, but we got the halving working in our favor, and if history is any rhyme, it should be a good year, right? Every cycle has had essentially three up years and one down year. Looks like this year is going to hold up on that. So we had our 2022, which was the big down year. And then we have this year, next year, and 25 for the good years, and then 26 will suck again. So that's how I don't make the rules. And if we know, I guess the cycle theory is broken if that doesn't happen.
My predictions, I think the buy the rumor, sell the news narrative around the Bitcoin's spot ETF approval is probably a little bit overblown. I think maybe it goes sideways for a little bit of time, but I don't see it being I don't think Bitcoin will fall 15% from, let's say, the day after the approval to ever, to be honest. 15% less than that. Second prediction, Nvidia's lower 1 year from now than it is today. Third prediction, somewhat speculative, Schwab gets absorbed.
By BlackRock or what? They already absorbed other people, TD.
Yeah, and that's part of the problem. Yeah, probably Fidelity or...
Too big.
Yeah.
Too big to fail. It's just like bigger and bigger, like the Chinese dolls that just like there's a bigger doll on top of a bigger doll on top of it's that. It's basically that with the banking system.
So we'll check back next year.
Yeah.
My prediction is Beau's gonna have a beautiful little girl,
baby.
healthy and happy baby.
Another baby.
Maybe a second one. Although that's
a good prediction.
Quick turnaround.
Yeah.
I'm not sure how you're gonna do that one, Beau.
I'll have to
Irish twins.
Reversed.
Irish twins. I think if I inseminate her again right now, it's twins. So
Don't use the word inseminate.
Yeah.
Hey, baby, want to come upstairs?
So I made this commitment on the podcast. I know we didn't talk about it first, but
yeah.
did you guys read any good books? Any that you want to call out? People should check out this year. I read. I read most of this this book called the Joy of Living, the Art of Living, the something of living, the importance of. I always mess up this title because there's a book for each of these variations. The importance of living, and it's about just kind of like enjoying the little things in life, and just like kind of not making too big of a deal of stuff. I think that was a good one that I read. And 4,000 weeks. What'd you say?
I'll look into that. I'm reading Thinking in Systems by Donella Meadows, and it's good. It's interesting. I think I'm naturally a systems thinker, so it's reinforcing some ideas I've had. But
Nice.
as I get deeper in the book, it'll hopefully I'll learn more.
Yeah, I haven't. There's a book I can never remember the title either. I think it's called. Here, wait. Hold on a second. Let me just try to see it.
Hey, Beau, do you know Daddy Cool by Boney M?
No.
This book
Check
was
out
really
that
good.
song.
The Payoff.
Okay. Payoff.
It's about.
What's it about?
So it's like the former Swift guy who like ran Swift. He just wrote about like
Yeah.
how the payment system works, which I think is, there's the
Oh, yeah.
monetary system and there's the payment system. And it's just like kind of good. Like, I don't agree with everything he says. He's like a pro CBDC guy. Like he kind of shits on Bitcoin. But in general, he has some interesting anecdotes and it's kind of well written. And so I kind of like that book.
The Payoff?
Payoff.
The Payoff.
The other one that I had mentioned was 4,000 weeks. It's about how you only live 4,000 weeks if you're lucky, and that you can't possibly fit all the shit you want to do in 4,000 weeks. So rather than get all
That's
depressed
crazy.
about that, yeah, 4,000. It's small when you make it weeks.
Yeah.
Don't make it months, because if you make it months, you'll really start tripping out. But the idea is that you can stress yourself out the fact that you have such limited time, right? But knowing that you have such limited time, might as well just kind of like enjoy it. Like, you ain't ever going to finish everything and anything. Whenever you get to an end, you're just going to create new goals for yourself anyway. So might as well enjoy the ride. Enjoy the cycle.
Spend your
Life's ups
Bitcoin.
and downs. Enjoy the Bitcoin cycle. I mean, this year was kind of like it was kind of low key exciting, right? Like we cleared out a lot of the negativity for the scammers. There was some clear signal and deviation between Bitcoin and altcoins.
Yep.
There was a lot of progress in the legal framework for adoption in the U.S. Mining continues to climb. Sign of a healthy hash rate climbing, sign of a healthy network from a security budget standpoint. We actually eclipsed the transaction fees more than the block subsidy twice this year. That was a first time thing. So a lot to be, looking back, it was it was kind of a quieter year than last year in a lot of ways. But I mean, kind of. Like, I think so. I mean, sure, we had a lot of events. Like, we had a lot of significant events, but they were like kind of like interspersed with these periods of quiet. Or maybe that's like my own personal observation, because I really wasn't tuned into the markets as much this year. Perhaps that's the case.
I'll say one thing. I have dozens of clients that I brought up Bitcoin to over the last couple of years. Okay, many dozens.
There's dozens of us.
Dozens have come back to me now and been like, oh, like they're like trying to rub it in my face, like, oh, like Bitcoin, right? And it's like, hey, I was pitching this to you at 20K. And people just don't know, because they just see the news around SBF, or like, I don't know what they're looking at, but they're not looking at what's actually going on. So it, like a sentiment check, people think Bitcoin's in the shitter and it's up 100%. So, that's an interesting signal.
Yeah.
Sweet. The year's over, boys. 2023
All right,
came and went. It
was
came
a
and went.
pleasure.
This was a pleasure, boys. I'm going to close my browser now.
Wait, don't close your browser. It needs to record. It needs to record. No, don't do it. No, don't do it. Well, next year we'll try to get together in person. Maybe we'll all be rich as hell, and we'll be able to afford airline tickets to, or maybe I'll have a full-time podcast studio by that point. Or maybe Sam will. He's the one doing. Sam, what's your show that you're doing now? You weren't doing that a year ago.
We're doing Swan Signal Live. So running the Swans podcast.
Say it like you mean it, dude. It's successful.
Swan Signal Live. Yeah, no, it's been good. It's been fun. Have Dr. Jeff on next week, and Eric Basmajian, who's a TradFi guy. He puts out really good research. But yeah, it's been fun. Just been doing that for about a year now, and took over for Brady, who started the show, and it's been fun.
Hell yeah, man.
Awesome. They're lucky to have
Sam's a
you.
full-time podcaster now. Amazing.
Yeah, I'm a podcaster now.
It's insane, dude. Like, life changes comes at you quick, man.
Yeah.
Sam's a podcaster. Beau's having a child. What is the world coming to?
It's crazy.
Well, guys, I'll wrap here. Thank you both for coming on again. This has been episode 45, sort of a macro recap of the year, predictions of the future. We will see you in 12 months at a much higher Bitcoin USD exchange rate, and hit that subscribe button. You know you want to.